Good morning. It's Thursday, March 21st, about 6 a.m. Central Time. Overnight, the precious metals are higher after yesterday's Federal Reserve meeting. You have April gold up $48 at $22.09. May silver up 57 cents, $25.68. May copper up 3 at $4.08. In April, platinum up 16 at $9.15. You also have June palladium up 16 at $10.17, and the gold-silver ratio at 86-1. So all eyes were on the Federal Reserve meeting. He came out yesterday, Jerome Powell, he acknowledged that the higher growth, that the economy's been quite strong, that we've seen stronger jobs data and the higher inflation. The higher inflation he blamed as more of a seasonal factor as well as the stronger jobs data. He also cemented 3 interest rate cuts this year. We thought with the higher inflation, or at least the market had thought, that we would trim that down to only 2 cuts this year. I came out yesterday in the video and I said that I really firmly believe that he's going to do the 3 interest rate cuts, June, September, and December. You go to June, it's about a 75% chance that they do cut rates at that meeting, and that should be probably the first interest rate cut. So what happens? The S&P trades up to new all-time highs. The gold trades up to new all-time highs. We see an encouraging recovery in things like Bitcoin, platinum, silver. So your silver and your platinum markets recovering off of some of those lows. Platinum dipped below 900. Great level down there, back on sale. We've been oftentimes adding to positions below the 900 level and then selling them as they rise up back above. On the silver market, you did have a head and shoulders pattern that was forming. We never formed the right shoulders. So you take that chart, throw it out, start with a new chart here. You go to the gold market. Many of you I outlined and many of you took action on, which was buying that gold market above that 2150, putting your stop at the 2145 level, targeting a breakout over 2175. Many people added to their positions above there, and now we're $50 higher. So congratulations to you that went on that. Again, we do have an encouraging recovery on the Bitcoin market. Also, crude oil futures starting to trend back higher as well. Soybeans and wheat are also breaking out to the upside, getting a little bit of bullish momentum from the decline in the dollar index, which was at a 3-week high and is now backed off. However, today we're seeing a small recovery in the dollar index, so we'll see what happens there. We do have a lot of economic data coming out today. We have some jobs data coming out. We do also have some PMI data. However, will that data even matter? I'm not sure anymore, so we'll have to see what the reaction is in that market. So when you have these types of chart patterns where you get a gap up to the upside, things like the gold market, what you don't want to see is that market turn negative on the day. We are up $48 right now. We take out the 2190 level, probably not going to be good here. So you want to trail your stop up if you're going to maintain the position somewhere into that gap. You don't want to see the gap get filled. So looking at the CME Fed Watch tool, you will have a 75% chance again that the Fed cuts rates in June. You go out to September, significantly higher as well. So we'll keep an eye on all these markets here. I think that there's some great opportunities again in the agricultural markets. Bitcoin looks like it's turning back higher. S&P 500, I'm not in favor here of trying to aggressively short it at any of these levels here because we just don't have that catalyst or tailwind here at the moment. So if you drew out some charts and things like that, you want to toss them out, print off some new fresh ones, file those old charts in the circular recycling bin below your desk, and then move on here from there. So we'll keep an eye, stay nimble here this morning. You got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk loss. May not be suitable to all investors. Good luck, good trading.